Bitcoin is like, this is it's a 3-month lag, or this is like, I think Michael uses maybe a 8 to 12 week lag, whatever, but it does lag about 3 months, the money supply. You can do this on M2 also. This is his measure of liquidity. It's proprietary, and it uses volatility and on bond volatility, and that is a little bit nuanced compared to M2, but they're on the same trajectory. And here's the point, is that Bitcoin it lags for 3 months. Here it's been above it. Could it mean revert back toward that global liquidity line? Yeah, but the global liquidity line is already rising again. So
James Lavish draws attention to an important connection between the price movement of Bitcoin and the dynamics of the world economy. He highlights how Bitcoin's fluctuations are closely linked to cycles of liquidity and frequently respond slowly to changes in the world's money supply. Bitcoin's function as a hedge against currency devaluation is strengthened by the fact that it usually follows central banks when they pump money. Additionally, Lavish cautions about short-term volatility, pointing out that Bitcoin may experience declines before continuing on its upward path. His long-term perspective, however, is still optimistic due to the steady decline in the purchasing power of fiat money. According to him, Bitcoin is safeguarding wealth in a time of rapid monetary expansion rather than merely increasing in value. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
James, go ahead.
So, well, I mean, it's not that the debt is low. It's like you said, that the stock market is way overvalued. We talk about this almost daily in our hedge fund. Like, how is that going to impact Bitcoin in particular, which has been seen as a risk on asset for so long, and it always comes back to, and when we look at it, it always comes back to where can that liquidity go? And why will it move out of stocks? What's the reasoning behind it? Where's it going to go? Obviously, gold is a beneficiary because it's the flight of safety for a century now, right? So that is obvious. It's going to happen. Bitcoin should be flight to safety. It's not yet. It should be. But like Scott said right out of the gates in the show, you have tariff threats over the weekend. You have geopolitical unrest, and what do investors sell? Whatever is open to sell, they can sell it 24/7. It's obvious. So that is one of the reasons that it will make these moves so early. And now it's obviously recovering from those lows. We'll see what happens. So, but again, it's still above where it closed year end. So for all that, the panic that we see on Twitter or X and crypto X, and Bitcoin in and of itself is holding in there pretty well, considering all the uncertainty we have on the table in front of us. I've expected Trump to use that sword, the tariff sword, and wield it and see and make a lot of threats. We'll see what really happens today when he talks to Mexico and we talks to Canada. So that's just one thing. I want to bring up something though, and this is important. So what's important about this is, I don't know if some of the people who are listening may have caught my conversation with Michael Howell last Friday, and we talked all about liquidity, global liquidity, where it's been, where it's going. So let's start with that one. Is that showing now?
Yep.
Yeah. So the global liquidity, where it's been and where it's going. We had a dip in global liquidity over the last month or and a half, maybe, but it's now starting to rise again. It's in that cycle. It's in that 4 to 5 year cycle where it's back on the upswing. And so here's what's important about what you're talking about, Mike, is that yes, the liquidity, the stock market is very, very highly, it's rich. The valuations are very rich. But what we will expect over the next 12 to 18 months, 6, 12, 18 months, is that there will be an expansion of the money supply to catch up to this. And that's just reality. We can't have a collapse in the markets. We know that we can't have a collapse in the markets. We would literally collapse our treasury markets. We can't have that. We would create, forget about what Doge is doing. It's a whole nother conversation that we can get into, but there's no way that we're going to be able to cut enough to overcome the deficit that would be created by a crash in the markets. So even
James, really quickly, I think I saw that Doge had cut $1 billion already, in federal salaries and such, and someone immediately responded, "Our debt service is $3 billion a day."
Right. So I mean, like it's
Cool.
moving chairs around the deck of the Titanic, right? So we really have to we have to focus in on the first principles of the money supply, and that's what's most important. And so going back to that, and the Bitcoin is like this is it's a 3-month lag, or this is like, I think Michael uses a maybe a 8 to 12 week lag, whatever, but it does lag about 3 months, the money supply. You can do this on M2 also. This is his measure of liquidity. It's proprietary, and it uses volatility and on bond volatility, and that is a little bit nuanced compared to M2, but they're on the same trajectory. And here's the point, is that Bitcoin it lags for 3 months. Here it's been above it. Could it mean revert back toward that global liquidity line? Yeah, but the global liquidity line is already rising again. So
in order to control the $1 trillion in U.S. debt that is due soon, Treasury Secretary Janet Yellen has been employing financial strategies, with a total of $7 trillion maturing this year. However, according to James Lavish, these temporary fixes are insufficient and will eventually result in the return of quantitative easing. The Federal Reserve is now decreasing system liquidity by allowing certain bonds to mature without replacing them. Lavish cautions, though, that the Fed will probably have to resume QE sooner than Wall Street anticipates as liquidity tightens. Even though the market appears to be disregarding this impending liquidity shortage, the reality will eventually catch up. Also, a quick reminder, only a small percentage of viewers are subscribed. If you enjoy deep dives into crypto and finance, hit that like button and subscribe. It's free and helps the channel grow. Now let's get back and hear what he has to say.
This is something important for people to understand, that when you're looking at all of these assets, and even if we do have short-term drawdowns, the reality is long-term, the money supply must expand to meet the debt service. It's just absolutely must expand to meet the deficits. And unless it does, we'll have a collapse of the fiat system. And so that's just first principles. It's reality. It's a long-term thought process. It's a long-term investment thesis. It's not short-term. So if you're trading around it, sure, there's going to be plenty of volatility. There's going to be volatility. I expect volatility. I would not be surprised if Bitcoin dips back down into the 80s. I mean, who knows? Okay. But I do expect it to be far, far, far higher in the future. And what I mean by that is for the dollar to be worth much, much less. This is a really important nuance, and it's not a nuance to people who are in crypto. Like they're feeling the pain, tremendous pain today. So that's not funny. We talk about it. We warn people about it, but this is a nuance for people who are not in crypto, who are people who are sitting around the desk where Mike is. That they're not aware that Bitcoin is stabilizing itself here as all of this turmoil happens around it. It's actually becoming stronger again, and that's going to continue in every single cycle. And this is just a new blip in this cycle. We do need to unpack the fact that Powell stood up there and flat out lied. And Mike, I'd like to hear your take on this, because I think he flat out lied that when he said that, bank reserves are abundant, and he said it twice, not once, but twice. And I'm looking at the numbers. I'm looking back to the repo crisis of 2019 and thinking he's out of his mind. I mean, there's with all that the Treasury did, and with Janet Yellen playing the shell game of moving money to the front end of the curve, right? So now you've got $10 trillion of debt that's coming due. You've got $7 trillion just this year or more, just because everything was pushed to the front of the curve on T-bills, and you have to move out now on the further end of the curve. And Bessent knows it. He knows he has to. He said it. He's got to start issuing debt that has coupons. And so now you're going to be in a position that the bank reserves only have about, I'd say, $300 billion, $400 billion left before they get to the level that makes the Fed extremely nervous, because of exactly what happened last time. They're not really doing QT right now. They're letting some bonds roll off their books and mature and not replacing them. But they're going to turn around and do QE again once that happens. And so how long do we have until that happens? Doge can only do so much to prevent that from happening in the next few months. So where are we? Because you can't issue new debt while we don't have a debt ceiling, or we have a debt ceiling that we're already above. Like we're coming down into like a corridor here that it just seems to me that Wall Street is kind of ignoring this stop sign that we're about to blow right through.
James Lavish draws attention to a crucial problem with the financial system that many people outside of the cryptocurrency industry might not quite understand. Bitcoin is demonstrating its durability in the face of economic upheaval, even though people in traditional finance might not be aware of this. Bitcoin keeps getting stronger with every cycle, confirming its position as a hedge against systemic instability, even in the face of market volatility and short-term suffering for cryptocurrency investors. Lavish also blames Jerome Powell, the chair of the Federal Reserve, of deceiving the public regarding the condition of bank reserves. Powell maintains that bank reserves are abundant, while Lavish challenges this claim by citing historical evidence, particularly the 2019 repo crisis. He argues that trillions of dollars in debt are now maturing all at once as a result of financial tactics by Treasury Secretary Janet Yellen, including switching the issue of debt to short-term Treasury bills. As a result, even though the Fed currently allows bonds to mature without replacing them, it will soon encounter liquidity limits that will probably force it to return to quantitative easing. In the end, Lavish cautions that Wall Street is mainly disregarding the indicators that a liquidity crisis is imminent. Market players are ignoring an imminent financial crisis. The government's reserves are diminishing, and it is becoming increasingly difficult to issue new debt. He believes that the Fed would eventually change its mind and start expanding the money supply again, which would support Bitcoin's long-term claim to be a safe haven investment. And as always, happy investing.